Welcome to lecture number 14, where we will be covering module number 3 under subject indirect taxation. So in this module, as we have already seen, time of supply, change in the rate of tax in respect of supply of goods and services, place of supply. So today we will be seeing value of supply. Let us know what is the meaning of this value of supply. So students, value of supply is covered under section 15. Okay, remember section 15 talks about the value of supply. Now, what is the meaning of value of supply? Value means the price. Value means on which you are going to charge GST taxes. That is either CGST, SGST or IGST. So value is nothing but the price of the goods and services on which you are supposed to charge GST. So students, under section 15, the value of supply shall be the transaction value. Okay, the value of supply shall be the transaction value. Now, what do you mean by this transaction value? Transaction value is nothing but the price which is actually paid or payable, okay, in respect of the goods or services that is being supplied. So remember students, transaction value is nothing but price that is actually paid or payable for the supply of goods or services or both, where two conditions has to be satisfied, and those two conditions are the supplier and recipient of supply are not related and price is the sole consideration. So if these two conditions are meeting, then only the value will be the transaction value, and transaction value is nothing but price actually paid or which is to be payable on the supply of goods or services is the transaction value, provided the supplier and recipient are not related. So when I say not related, means they shouldn't be related to each other. Now, when do we consider a recipient and supplier to be related? So students, a supplier and recipient are considered to be related if they are partners, legally partners in a business. Suppose Mr. X and Y both are partners in a business. So it is considered to be that X and Y are related to each other. Suppose if such persons are employee and employer. So if they both are having employer and employee relationship, means they are related. Okay, such persons are officers of one another, officers or directors of one another's businesses. So suppose if Mr. X and Y, they are the directors of the same company, or in each other's company they are directors, then they are considered to be related. If suppose one person controls directly the another person, so suppose if he is holding more than 25% or 50% of shares in another person's company, then they are said to be related. If they are the members of the same family, they are said to be related. Okay, and if the third person is controlling these two persons, that is the supplier and the recipient, suppose if the third person is having more than 25% of shares or stocks in both the person's companies, then they are said to be related. So in case they are related students, then the value will not be transaction value. Value will be transaction value only when the supplier and recipient are not related to each other. Now, what is the meaning of related? We have seen. Now, price is the sole consideration. When I say price is the sole consideration, means monetary supplies made solely for monetary purpose, that is supplied made solely for the price in money, so that any monetary consideration is involved, then the value shall be the transaction value. So remember students, section 15 talks about value of supply, where it says that the value on which GST is to be charged, on which GST is to be calculated, shall be the transaction value. Now, what is transaction value? Transaction value is the price actually paid or payable when there is a supply of goods or services. Only when two conditions are meeting. Condition number one, supplier and recipient should not be related and price is the sole consideration. Suppose students, Suppose if supplier and recipient are related and price is not the sole consideration, suppose they are giving the consideration in a non-monetary form, then what will be the value on which GST should be charged? So for that, there is a separate rules that you have to follow for charging GST. So today we'll just be seeing when these two conditions are met, the value will be the transaction value and how to calculate this transaction value. So students, you know the value is the transaction value. Now this value includes all these five elements. So remember students, this is section 15 subsection 1, section 15 subsection 2, clause A, B, C, D and E talks about the things or the elements that you have to include in the value. So the first thing that you got to include in the value is any taxes exception GST taxes. So the value of supply of goods and services shall be the transaction value, as you already know. And what is transaction value? The price that is actually paid or payable on the sale of goods or services. But this transaction value shall include any taxes, any duties, any cess, you can say any fees or any charges that is levied under any law, but not GST taxes. Like you will not include in the transaction value, you will not include CGST, you will not include SGST, IGST, composition cess. So let me just give you an example for this particular any types of taxes. Suppose if any goods, there is a supplier, suppose you say in Karnataka, and he has to supply goods to a person in Mahabaleshwar, okay, to a recipient in Mahabaleshwar. So suppose the value of the goods, example I'm taking is 50,000 rupees is the transaction value. When he's transporting the goods from Karnataka, from we take Bangalore, from Bangalore to Mahabaleshwar, when he's transporting the goods, Mahabaleshwar government municipal authority collects certain amount of taxes on the entry of the goods into Mahabaleshwar, for example. So 50,000 is the value of goods plus that entry tax that is taken by the municipal authority of Mahabaleshwar is charging another, suppose 5,000 rupees. Now, what is going to be the value of supply? The value of supply will be 50,000 plus the 5,000, that is taxes collected by municipal authority of Mahabaleshwar in order to make the goods enter Mahabaleshwar. So the total value will be 55,000 is the value of supply. 50,000 is the price to be paid or payable and 5,000 is as per section 15 subsection 2 clause A, any taxes. So municipal authority, whatever taxes it is collecting, that taxes also has to be included in the transaction value. Suppose if it is not included, then you have to include. Suppose 50,000 already includes the taxes, then you need not include. Exception GST taxes, like whatever GST taxes that has to be levied, that has to be excluded from the transaction value. So did everyone understand section 15 subsection 2 clause 1, where it says that any type of taxes or maybe fees or maybe charges should be added in the transaction value, but exception those taxes which are charged under the GST law. Is this clear, students? Section 15 subsection section 15 subsection 2 clause A. Is this clear, students? Any taxes, did everyone understand what do you mean by any taxes exception GST taxes? Yes? Yes, students?
Yes, ma'am.
Because remember students, section 15 subsection 2 and 3 is helpful for us in solving the problems. That is why I'm repeating and asking whether you all have understood this particular subsection A. So this is covered under section, just let me help you all. This is covered under section 15 subsection 2. Okay, this is clause A, this is B, C, D and E. Is this clear, students? Okay, let us move to section 15, subsection 2, clause B, which says that what else should be included in the value of supply. So any amount that the supplier is liable to pay in relation to such supply but has been incurred by the recipient. So in short, students, actually at the time of supply of goods or services, the expenditure was to be paid by the supplier, but the recipient is paying that. So in such a case also, this particular amount what the recipient is paying on behalf of the supplier, that also should be included in the transaction value. So just let me give you all an example. In the same example we continue. Suppose I said that a supplier in Bangalore has to take the goods to Mahabaleshwar, has to send the goods to Mahabaleshwar through transportation, right? So what happens? The supplier in Bangalore tells to the recipient in Mahabaleshwar that I am transporting the goods. Actually, it is the duty of supplier to bear the transportation expenses. But the supplier will tell the recipient that I'm transporting the goods. When the goods reach to your factory, make sure that you make the transportation payment of transportation charges to the driver of the truck. Okay. Now, actually, who had to bear the expense? The supplier. But who bore the expense? Recipient. So suppose if the transportation charges are 2000 rupees, suppose for example, this is just example, 2000 rupees, then this 2000 rupees has to be added to that 50,000. So 50,000 plus this taxes, that is 5,000, and plus this 2,000 has to be added. Why it has to be added? Because it was an expense to be incurred by the supplier, but it has been incurred by the recipient. So any amount that the supplier is liable to pay in relation to such supply, but which has been incurred by the recipient, that amount has to be added to the transaction value. So any amount that the so did everyone understand section 15 subsection 2 clause B? Yes, students?
Ma'am, tell once again.
See, first of all, value of supply is nothing but the value on which you're going to charge GST. So if the value you're deriving correctly, then the GST amount will be derived correctly that you have to pay to the government. So how to calculate this value? This value is nothing but the transaction value as per section 15 subsection 1. But to this value, you have to add 5 items if they are not added to the transaction value. If they are already added to the transaction value, you need not add. But if they are not added, you need to add. So first thing, if there are any taxes collected exception GST taxes, you need to add those taxes. Second thing, if any amount that the supplier is liable to pay, actually the cost of that is to be borne by the supplier, but the recipient has paid that. The recipient has paid that amount, then such amount has to be added to the transaction value and GST has to be calculated on that. So when I say section 15 subsection 2, it talks about the inclusions in the transactions value. So any amount that the supplier is liable to pay in relation to such supply, but which has been incurred by the recipient. Is this clear now?
Yes, ma'am.
Okay. Suppose the recipient is liable to pay and the recipient has paid it, then it has not to be included in the transaction value. Only that amount has to be included with supplier is liable to pay actually, but recipient has borne that expense. Okay. Third one is section 15 subsection 2 clause C, that is incidental expenses. Now what do you mean by incidental expenses is, suppose I just continue that example so that you understand these clauses properly. Suppose the recipient in Mahabaleshwar is saying that, suppose some glass items has been is to be delivered from Bangalore to Mahabaleshwar. So it's some glass items. So what does this recipient in Mahabaleshwar tells the supplier that since it is glass items, I want a double special packing for it. The normal packing is there, but I want special packing for it so that the material is not being damaged. So incidental expense means all those ancillary expenses, all those additional expenses that is incurred in respect of supply of goods or services. So it will include like packaging. Okay, if there is any commission, it will include commission, packing expenses, parking expenses. Okay, so incidental expenses are those expenses which are charged by the supplier to the recipient. Okay, which are those expenses that are incurred after the supply of goods or services. Like if special packing is required, if suppose insurance on those goods is required. So all the ancillary additional expenses in relation to the supply of goods or services has to be added in the transaction value. Suppose the recipient tells, okay, I want the insurance for the particular goods that you are transporting. So then insurance is an additional expense. So this value of that insurance also has to be added in the transaction value. Is this clear, students? Either it can happen at the time of delivery or before delivery of supply of goods or services. So any expenses in relation to the supply of goods or services which are additional, incidental, ancillary, like commission, packaging, insurance, parking expenses, whatever expenses are additionally incurred in the supply of goods or services, that has to be added to the transaction value. So is section 15 subsection 2 clause C clear? So if the supplier is doing a special packaging for the goods that have been transported to Mahabaleshwar, this extra packing charges also has to be added to the transaction value in case if it is not added earlier. So students, is this clear? Is section 15 subsection 2 clause C clear, students?
Yes, ma'am.
Okay, now let us see section 15 subsection 2 clause D. Interest or penalty for delayed payment. So what happens here is, suppose we continue the example, suppose the supplier in Bangalore is telling to the recipient in Mahabaleshwar that if you are not making the payment of this particular transaction within 3 months, then I am going to charge you an interest of suppose 1,000 rupees for per day delay. Suppose it's an example. So what happens now after 3 months? Also the recipient is not making the payment, so the interest is being charged of 1,000 rupees. Now this 1,000 rupees also has to be included in the transaction value and GST has to be paid on that. So any interest or penalty for delayed payment, any payment which is being delayed by the recipient, okay, which is delayed payment means once which crosses the due date. The supplier usually gives a due date that within this period you are supposed to, credit period, within this period you're supposed to make the payment, and if you fail, interest will be charged. So whatever interest is charged by the supplier to the recipient, this interest value also has to be added in the value of supply. That is the transaction value. Is this clear, students? Section 15 subsection 2 clause D. Is this clear? Yes?
Yes, ma'am.
Okay. Next, let us see section 15 subsection 2 clause E. Any subsidies received, exception government subsidies. Subsidies, as you know, is nothing but a reduction in price, or maybe subsidy is nothing but it is an extra benefit that is being given, okay, to certain organizations, business unit. Okay, so any subsidies that you're receiving, that also has to be included in the transaction value. But if the subsidy is received from a government, that is not to be included. So any subsidies received exception government subsidy. Now suppose, just continuing with an example, suppose the material that is transported from Bangalore to Mahabaleshwar is for certain backward people in Mahabaleshwar, or for helping certain people in Mahabaleshwar, okay, financially, just for charity purpose. So what happens here is, for doing such a good job, certain trust will give the supplier a subsidy in for doing such particular type of transaction. So whatever subsidy the supplier is receiving for this particular type of transaction, suppose the subsidy is received by XYZ trust, okay, so it is not a government subsidy because it is not received by government, it is received by an independent trust association or organization. So this amount of subsidy that the supplier is receiving, it has to be added back to the transaction value, it has to be included in the transaction value, and GST has to be calculated on that particular value. But suppose the same subsidy was received by Karnataka government. Karnataka government said that for this particular type of transaction, since you are helping the people there, we give you a certain amount of subsidy. Now, if it is received by Karnataka government, whatever amount of subsidy is received, that should not be included in the value because it is subsidies received exception government subsidy. Government can be state government, central government. Okay, so subsidies received by any person other than government should be included in the transaction value. Is this clear, students? And these subsidies should be directly related to the price. Okay, is this clear, students? Section
Yes, ma'am.
15 subsection 2 clause E. So quickly we revise. Section 15 subsection 1 says that value shall be transaction value. What is transaction value? Price actually paid or payable. When will you consider value as a transaction value? When two conditions are satisfied. Buyer and seller are not related and price is sole consideration. When I say not related means they should not be related to each other. Like I told you what is the meaning of related. They should not be members of same family. They should not be partners of the same business. They should not be directors of each other's company. A third person should not be controlling each other. So if this is happening, they are related. And price is a sole consideration, which means it should be in monetary value. Okay, it should not be, the transaction should not be in a non-monetary form of consideration. Now, Section 15 subsection 2 says apart from transaction value, there are certain 5 list of items which has to be included in the transaction value. If it is not included, suppose if it is already included, then you need not add this to the transaction value. So what are the 5 items? First, any taxes exception GST taxes, amount that the supplier is liable to pay but it is paid by the recipient, incidental expenses, interest or penalty for delayed payment, and subsidies received exception government subsidies. So for solving any problem, students, if you know this 5 sub clauses, it will help you to easily solve the problems. Next let us see section 15 subsection 3, which says that what should be excluded. Now included, we have seen 5 sub clauses under section 15 subsection 2. Now what should be excluded from this value? Excluded means deducted, minused. What should be excluded? Discounts given, but when? Discounts given before or at the time of supply if such discount has been duly recorded in the invoice issued in respect of such supply. Okay, so first let me just explain this. Remember, students, any discount that is given before or at the time of supply, if such discount has been recorded in the invoice. So just I'm extending that particular example. The seller in, or the service provider, or you can say the seller in Bangalore, okay, he is giving discount to the recipient in Mahabaleshwar before making the transportation, like before delivering the goods or at the time of delivering the goods, he is giving some discount. And when he is issuing the invoice, in the invoice also he is mentioning the discount amount. So if these 3 conditions are happening, either he is giving discount before or maybe at the time when he is delivering the goods, and if such discount is mentioned in the invoice that he is issuing to the recipient, then yes, such discount should be deducted from the transaction value, should be minus from the transaction value, should be excluded from the transaction value. One is discount given before or at the time of supply, and discount given after the supply has been effected. After the supply, once the supply is done, also such discount should be excluded only and only if Such discount is established in terms of an agreement entered before or at the time of such supply and specifically linked to relevant invoices. An input tax credit as is attributable to discount on the basis of document issued by the supplier has been reversed by the recipient of supply. So just let me explain this in short to you all. Suppose, same example again, I'm continuing. The what to say, the supplier in Bangalore is supplying the goods to the recipient in Mahabaleshwar. So what is happening here is, at the time of supply or before the supply, he is not giving any kind of discount, but after the sale is made, he's giving a discount, but this discount has been decided before the supply. The agreement was entered before making the supply that if you purchase suppose x number of goods from me throughout the year, at the year end I will give you certain amount of discount. So the entire year the supply was made, but the discount is given at the year end, so it is after the supply, but this discount was already been decided by the supply, means already been discussed by the supplier and recipient before the supply happened. So remember students, discount that is given after the supply has to be excluded only if such supply was decided or entered into agreement before the before or at the time of making such supply. Okay, and such supply should be, such discount should be linked to relevant invoices. So you should be able to trace that for which particular invoice which particular discount was given. So the discount and invoice, there should be a matching of it, that for which invoice what was the discount given. If discount cannot be linked to any particular invoice, then it should be included in the transaction value. If it can be linked, then it has to be excluded. Second thing is, input tax credit is, as I told you all, input tax credit is a credit that is taken by the recipient. Okay, so for example, I'll just give you an example. The seller in Bangalore has sold goods to the recipient in Mahabaleshwar at rupees 50,000. Okay, now 50,000 at the time of sale or before sale, there was no discount given. Now 50,000 was given, but the discount was decided that I will give you discount after 3 months. Okay, if you purchase any number of items from me. So on this 50,000, so what happens is 50,000 is the, on 50,000 the input tax credit is given to whom? To the recipient. Now this recipient, when he gets the discount, he has to reverse the input tax credit on this discount. Suppose on 50,000 the tax is coming 5,000 rupees. So 5,000 is then only if it is reversed by the recipient, then only the value of discount has to be excluded from the transaction value. So let me just again repeat this particular slide. Value of supply excludes discount. Which discount? Discount which is given before or at the time of supply should be excluded. That is, without any condition, it has to be excluded if any supply is given before or at the time of supply and the invoice is showing the discount amount. Okay, after the supply also, if discount is given, it should be excluded only if two conditions are meeting. Condition number one, agreement was already entered regarding the discount before or at the time of sale, and second thing is the input tax credit in relation to the discount is been reversed by the recipient of supply. If yes, then even after discount that is given after the supply or sale is being made, that has to be excluded. So students, is this particular slide clear to you all? Yes, students? Yes? Okay, you'll understand it better when we solve the problems. But just remember what it includes: transaction value, what it includes. That is a clause number 2, the 5 subclauses that we have seen, and what it excludes is clause number. This is section 15, subsection 3, clause A and B. So this particular section is section 15, subsection 3, and this is clause A and clause B. Okay. Now, let us move ahead. Now, just let us take a quick recap of value of supply. Students, value of supply is covered under section 15. Subsection 1 says that value of supply shall be the transaction value. Transaction value is what, students? Price actually paid or payable on the supply of goods or services. Only if the supply is made between unrelated person and price is the sole consideration for supply. Next, we saw section 15, subsection 2, which states that what all should be included in this transaction value. What should be included? Any taxes exception GST taxes, any amount which a recipient was liable to pay but was paid by the any amount which the supplier was liable to pay but which was paid by the recipient, incidental charges either at the time or before supply, interest, late fee, penalty for delayed payment, subsidies directly linked to the price excluding government subsidies. Then we see section number 15, subsection 3, which says that what all should be excluded from this transaction value. When I say excluded, means minus, deducted. Discounts which are given before or at the time of supply and can be linked to the invoice, they have to be deducted. Discounts given after supply also has to be excluded, provided if it is in the agreement and ITC has been reversed by the recipient in respect of such discount. So this in short is value of supply, where you just need to know subsection 2, subsection 3. Based on this, you can solve any kind of problem. So students, is section 15, subsection 1, 2, 3 clear? Yes, students?
Yes, ma'am.
Okay. Now let us see section 15, subsection 4 and 5. What does 4 and 5 say? So section 15, subsection 4 says that where value cannot be determined as per section 15, subsection 1, 2, 3, in case of sale of related person, supply where price is not a sole consideration, and supply is a notified supply. Notified means whichever government will notify by its notification, then it shall be determined in a manner that is, there is a certain set of rules for these kind of value that has to be determined when the sale is between related person, price is not the sole consideration, and supply in case of notified supply. For all these three cases, you cannot apply the value as a transaction value. For all these cases, you have to apply rules, and such rules are notified in chapter number 4. So then value of supply shall be determined as per value of supply CGST rules, chapter number 4. So you have to determine the value for these three cases not as per the transaction value, but there are separate rules for their valuation which we'll be covering later. So today we will be covering transaction value, where the buyer and seller are related and not related, and price is the sole consideration. So this is section 15, subsection 4. So now let us move ahead with the problems on value of supply. Okay. So let us move ahead. Everyone can see the screen? Yes?
Yes, ma'am.
Okay. Mr. A sold a solar panel for 50,000 after adjusting the subsidy of 20,000 received from charitable trust. Now, subsidy is reduction in value. So, from 50,000 after adjusting means 50,000, the value must be 70,000. From 70,000, subsidy is reduced. So, it has become 50,000. So, it has sold the goods worth rupees 50,000 after adjusting subsidy of 20,000 received from charitable trust and 16,000 received from central government. So, what is the transaction value? Now, transaction value first is the price actually paid or payable. So, let us see solution. First is the price actually paid or payable, that is 50,000 is the price actually paid or payable. Now, to this price, we add certain things and we deduct certain things. So, we know that as per section 15, subsection 2, clause E, any subsidies received, exception subsidies received from the central government or state government has to be excluded, but subsidies received from any person other than government has to be included. So subsidy of 20,000 is received by charitable trust. Now charitable trust is not a government, therefore subsidies received from charitable trust has to be added. When I say included in the transaction value means you have to add. Okay, and subsidies received from the central government you have to not include it, so you have not considered it. So what will be the transaction value on which you will charge GST? It is 70,000 and GST will be charged on 70,000. So subsidies received is covered under which section? Section 15, subsection 2, clause E. Subsidies received has to be included, exception government subsidies. Government subsidies has to be ignored and not included in the transaction value. So students, is this particular problem clear?
Yes, ma'am.
Yes,
Yes.
ma'am.
Next. Mr. A has provided the following particulars relating to goods sold to by it to Mr. B. So Mr. A is the supplier and Mr. B is the recipient. List price of goods exclusive of taxes and discounts is 50,000. Taxes levied by municipal authority on the sale of such goods is 5,000. So students, we'll just go line by line. List price of goods is nothing but the price paid or payable, which is 50,000. Okay. Now, taxes levied by municipal authority on the sale of such goods. Should this 5,000 be included in this 50,000, or what should happen to this 5,000 students?
Include, ma'am.
Included, because as per section 15 subsection 2 clause A, any taxes exception government taxes has to be included. We have seen here students, any taxes exception GST taxes has to be included. Therefore municipal authority, whatever tax it is levying, it is not a GST tax, therefore 5,000 has to be included. Next, CGST and SGST chargeable on the goods is 10,440. Should this amount be added to this 50,000 students?
No, ma'am.
Should? No, ma'am. Very good. Why? Because as per section 15 subsection 2 clause A, any taxes should be included but not GST taxes. Therefore we are excluding it. Next, parking charges not included in the above price 1,000. So parking charges are being charged by A to B. Should it be included or excluded, or what should be done with this 1,000 rupees?
Included.
Included, because we have seen as per section 15 subsection 2 clause C, incidental expenses, either it can be at the time before or at the time of supply. Incidental means additional expenses, which can be your packing, commission, insurance, parking, okay, relating to the supply of goods or services. So very good students, we have to include this. Next, A Limited received 2,000 as a subsidy from NGO on the sale of such goods. So tell me students, should this 2,000 be included or excluded?
Ma'am, included.
Yes,
Included.
Included because subsidy is received from NGO and not from government. If it was received from government, you would ignore this. But since it is received from any person other than government, you have to include this 2000 rupees as per section 15 subsection 2 clause E. Okay. The price of 50,000 of the goods is after considering such subsidy, and subsidy means reduction in price. So the price actually was 52,000 maybe, and 2,000 after deducting, after adjusting, the price is 50,000. Therefore, you are including this. Now, A offers 2% discount on the list price of the goods, which is recorded in the invoice for the goods. So should this discount be included or excluded? Such discount is already recorded in the invoice of the goods, students. When he is issuing the invoice, this discount is recorded in the invoice. So should discount be excluded or included, students?
Excluded.
Very good, students, because as per section 15 subsection 3, we have seen that any discount that is given at the time of before supply, which is recorded in the invoice, which is mentioned in the invoice, which is linked to the invoice, that has to be excluded. We have already seen here under section 15 subsection 3 clause A. Very good. So all the answers are given by all. We have to just put it in the form. We have to just put it in the answer. So solution, computation of value of taxable supply. List price of the goods we have written as 50,000. To this 50,000 you have added tax levied by municipal authority on the sale of such goods, that is 5,000, which is as per section 15 subsection 2 clause A. Next, CGST, SGST chargeable on the goods not includable in the value as per section 15 subsection 2 clause A, so it is nil. Packing charges, which is included in the value of supply, which is included in the value as per section 15 subsection 2 clause C, which is 1,000 rupees. Subsidy received from a non-government body as per section 15 subsection 2 clause E, which you have included. So when you add all this, you get 58,000. Now from this 58,000, you're going to less discount. Discount is given at 2% on the list price, and list price mentioned is 50,000. So 2% on 50,000 is 1,000 rupees, which you have to exclude. Since discount is known at the time of supply, it is deductible as per section 15 subsection 3 clause A. So from 58,000, when you're deducting 1,000, you're getting 57,000. So the value of taxable supply is 57,000. On 57,000, you are going to charge GST depending upon the rate of GST. So is problem number 2 clear to all students? Yes,
Yes,
students?
ma'am.
Okay. So if you all know section 15 subsection 2 and 3 thoroughly, students, you can solve problems on value of supply. We have few more problems to be covered, which we will be covering in our next class since we are running out of time. Is this problem number 2 clear to everyone? Yes, students? Okay. Thank you so much, students. We are done for the session for today.
Thank you, ma'am.